You're watching Personal Finance with Coach Kelvin. Let's get into the video.
Hey guys, Coach Kelvin here. Today I just want to talk to you about why I'm still buying crypto even though the market is dipping. So when you are looking at purchasing something and holding long term, obviously the price is going to fluctuate, okay? Some months you'll be buying in when the cost is very expensive, other months you'll be buying in when the cost is very low. Now, obviously, during our accumulation of wealth phase, the less we pay for stocks, the better our return could be long term. So when we see that the price of crypto has been coming down, especially that of Bitcoin, Ethereum, Cardano, Dogecoin, we've got now some buying opportunities if that is an asset you wish to hold long term. When it comes to holding a portfolio of these type of assets, it's important to think about why it is you bought them in the first place. For example, if you were willing to purchase Dogecoin for 75 cents US or 90 cents Australian, why has the fundamentals changed so much that you would want to sell for a loss at 25 cents, for example? Perhaps that is not the case and you got freaked out and your emotions took over, so you liquidated. I highly recommend though, during these volatile times when the price dips, if this is an asset that you would like to hold long term, simply buy more or do nothing and continue to hold. Crypto is notoriously very volatile and moves in much quicker swings than the stock market. So if you are wanting to expose yourself to these type of assets, make sure that you are mentally very prepared to see your portfolio halve or double overnight. When it comes to holding something that has a lot of media hype behind it, that sort of news is going to funnel funds towards that. So as soon as that media hype dies off, you're going to see as the funds are pulled and those assets are sold, the price will significantly drop during that sell down period. So what you may find is that while everyone else is selling out of a stock, this is a better opportunity for you to buy the stock. And even though Warren Buffett never said this about crypto, he said it about the stock market, the same principles apply. The famous quote goes, "Be fearful when others are greedy, and be greedy when others are fearful." So, likewise, if you see everyone buying into a hype coin or a hype stock, and that price is getting pushed up just because everyone's buying in, that means that the same way the stock or the cryptocurrency could drop in price just based on what the general sentiment of the buying power of people is. If you see everyone selling out of Bitcoin, that's possibly a better opportunity for you to buy in than it would when everybody is buying in, okay? So it's important to, one, know exactly why it is you're buying into that asset in the first place. Two, understand your dollar cost averaging strategy if you have one and how much you're willing to contribute every single month or week or year, etc. Now, if you get to a point where you decide, okay, if it drops to this percentage, let's say there's a 20% drop, you're going to increase your contributions for that week or the next few intervals that you invest in before you pull back down. That can be a really good psychological tool to have as well. Because if you believe that the value of that currency or that asset could be greater, why not put more into it when it's at a discount? I, for example, have increased my contributions to Bitcoin, Ethereum, and Cardano in the last 2 weeks because the market is now lower than I have ever bought it for in the past. And if I was willing to buy Bitcoin at 48,000 Australian and at 50,000 Australian and at 80,000 Australian, why would I not want to buy it at 40,000 Australian? So I'm far better off now putting money in than I ever was previously. Yes, my initial buys may be at a loss, but my future gains could be amplified because I've now lowered my average buy-in price. And this is something that you guys can take away and implement into your crypto investing strategy also. You may actually decide that you have one or two favorite coins that you want to have, you dollar cost average in every single month or week, etc. And let's say you think that the price in 5 years, based on market cap and the amount of funds coming into the crypto market over the next 5 years, let's say you feel like the price could 30x in value or something, okay? I don't know, I'm just making up these figures. So you've gone from $1 to $30 essentially. If you see that cost come down from $1 down to 50 cents, so the price halves, but you still believe that the top value could be $30, then you have now got the opportunity to lock in a 60% gain if your hypothesis on that crypto is right and you buy at that 50% discount. So yes, your first purchase may have been at the dollar mark, so you'll get a 30x return on that, which is still phenomenal, let me please say. But the next time you buy, if you get that 50% discount on the initial price, you have then amplified your future returns if your hypothesis is correct. So I strongly believe that despite what everyone around you is going to say, how everyone pulls their funds out when things get a little bit volatile, and despite your strategy maybe have been to invest less because the market's a bit more volatile, this could potentially be the best time to build some real wealth. And this is why I've now increased my contributions to crypto from about $50 a week to $150 a week, just while everything is lower than I've ever bought it for before. Once my portfolio weighting comes back to the level I want it, which is where I have 1 to 2% in cryptocurrency of my entire net worth, then I will reduce my contributions to that again. If the market then has a really big run, I can put more funds into my shares, my peer-to-peer lending, and my real estate, because my extra funds that I've put into the crypto market now will give me greater returns later if there is another bull run. Therefore, I will not have to contribute as much to this asset class to keep it at my goal weighting. I hope that makes sense. So essentially, letting the market do the hard yards for you, and not so much the dollar cost averaging or the deposit of your own funds when you see a big discount, can amplify your returns later, meaning you can divert more funds into other classes during times where they are underperforming or not getting as good a return. Then you're able to load the boat essentially on it. Now, if you have a goal for a higher level of exposure to crypto, it's likely you'll also have a higher risk tolerance. So it's important to know that you are going to write a contract with yourself, or to at least commit to holding your cryptocurrency assets for a particular amount of time, or until the price appreciates to the point that you wish to then liquidate. So let's say your goal was, for example, to pay off your house with the capital gain you make on a cryptocurrency. Okay, I'm going to assume that whatever cryptocurrency you buy is a stable one for this example. So by stable, I mean it won't go to zero because it has real asset backing behind it. Let's say, for example, you have 10,000 Cardano now, okay? And your goal is to pay off your house within a decade using this asset. Figure out how much money you have left owing on your house right now, okay? So let's say, you've got 10,000 Cardano coins and you've got a $100,000 loan left on your house, okay? You're then going to have to be patient until the price of those Cardano coins reaches $10 per coin. Then you'll be able to sell them down and pay off the house with that earning. Yes, you will incur some capital gains tax, but that will be discounted because of the long-term capital gains tax discount. So by holding for more than 12 months, you will actually be eligible for that. So what you may then do is write down or make an actual physical contract with yourself. I am not going to sell this asset class until I reach my $10 per coin or per crypto goal, because you do believe it's going to get there. And it may never get there. It may fluctuate way too much and be a really scary investment to have. But at least if you know your exit strategy before you get into it, you will not find yourself stuck or unable to liquidate any assets that you wish you didn't have, because you find other opportunities. Of course, we may be patiently waiting for our Cardano to hit that $10 mark if it possibly could. And let's say you don't quite hit $10, you get to $9.50, but then you see another great opportunity prop up, perhaps in the form of a discounted international ETF. Or it could be a really nice real estate investment trust that's just had some bad news and it's had a significant price drop. You can just redivert some of those funds from crypto into that. Or you could actually just sell the stake you already had in crypto and put that towards paying off your house, so you're left with only, a 5% remaining balance on the loan, something like that. So guys, it's important when investing into the crypto market to know your strategy, stay with it long term, and try to also not buy things on hype. Try and buy things when people are not interested and the price is having a significant drop, because that's where we can lock in those larger gains later on. I also want to really point out the importance of keeping a level head during these times. So just because your friend made more money on Wink coin than you did on Bitcoin doesn't mean either of you are wrong, especially if they've just dumped money into a coin they saw on Facebook as being popular, where you've done your research. They technically would have just got lucky, whereas you know what it is you're buying and you understand how that cryptocurrency or asset can work. I highly recommend always doing your due diligence and staying the course during the volatile times and the growth times, because you want to experience everything when you have a small sum in the account, so that when you have a big sum in the account, it doesn't throw you off and you lose a lot more. If I see a 5% drop in my portfolio when it's $100, I only lose $5. I'm going to be able to stomach that, and I'm going to be able to stay the long term. But if I see a 5% drop in my portfolio when it's $1 million, I'm going to be terrified to lose that $50,000, okay? So therefore, I'd rather develop my stomach for the volatility of investing, especially in crypto or the stock market, now while my net worth is less, so that the blow doesn't feel as severe as if I were to invest and get a loss for the first time on a large portfolio. Alright guys, I hope you enjoyed this video as to why I'm still personally buying crypto. If you got any value from this video, please like, share and subscribe, and I really look forward to seeing you in the next video.